Good day, everybody. Happy New Year. Ed Ponsi here, your FX educator here on behalf of FX Street. Once again, it's a beautiful new year. It's Monday, right? And it's January the what? January the 9th, and it's like 13 degrees Fahrenheit here on the East Coast of the United States, but hopefully it's going to warm up soon. My goodness, it's an ice box out there. Anyway, I hope everyone had wonderful holidays, whatever you celebrate or not. If you choose not to, that's also, respected. And so I hope everyone's great. Hope we all have a good New Year. The wonderful thing about the change in the calendar, it's a good thing and a bad thing, is this. When you're in our business, when you're in the business of trading and extracting money from the markets, then no matter how good you did in 2016 or how badly you did or if you broke even or whatever happened in 2016, it doesn't matter now. The calendar has turned, the page has turned, it's 2017, and it's time to start fresh, right? So we start fresh by thinking about what is the most important things in our trading. Risk management, right? Risk management. I tell people when I meet them, if I'm not sure, if I'm not sure how to approach them, if somebody asks me what I do for a living, I tell them I'm a risk manager. Because sometimes if you tell people you're a trader, they get all freaked out. Some of them. It's true. So I just tell them I'm a risk manager, and they kind of leave you alone, after that. So that sounds pretty boring, and then that way you don't have to play 20 questions with them, or should I buy this? Should I sell that? Everybody starts looking for investment advice as soon as they figure out you trade for a living. I guess it's kind of like being a doctor. If you tell somebody you're a doctor, then everyone says, "Oh, hey, my knee hurts. Can you look at it for me?" And it's like, dude, this is a party. I'm not at work. Anyway, look at this chart. First of all good things must come to an end. And one of the best things about late 2016, we had some amazing trends. And particularly in the yen pairs. Here you see the British pound, Japanese yen. Bouncing off of the 10-day exponential moving average and then just rocketing and bouncing again and rocketing. And finally, it hits it and eventually it breaks. And that it's always going to break sooner or later. I've never seen one of these that didn't break sooner or later. But that's okay because there's a lot of money to be made in the meantime. Okay? So it was pound yen, it was Aussie yen. Look at that one. This was my favorite. Here you go, bounce, 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 and finally break. But a lot of money to be made. Now, if you have two or more of these staring you in the face, which one do you take? Because you can't take them all. I mean, dollar yen was also running up the 10-day. Look at that. Bounce, 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 and break. Right? They all broke eventually. But there were plenty of money-making opportunities along the way. So if you see this on pound yen and Aussie yen and dollar yen, and it's all happening at the same time, which way do you go? Which one do you choose? I choose the one that pays the most interest, right? I choose the one that pays the most interest because if you're in a trade like this, you could be in it for weeks, hopefully longer, because the longer you're in, the more money you're making. It's like a wave. This trend is like a wave, and you're surfing this wave. And the longer you can stay on the board, the more money you're going to make. So when people ask me, well, how long are you going to stay in that trade? I say, gosh, I hope for a long, long time because that's where the money is, right? That's where the money is. Okay. So yeah, all trends must come to an end. You know, the trend is your friend until the end, and the end did come in late 2016 for a lot of those trends. But you know what? If you look around, there's always something trending somewhere. Now, that doesn't necessarily mean that everything out there is good to trade, but let me show you something. What's the worst performing currency, you think, of 2017 so far? I mean, we're only 9 days in, so we're basically 1 week into the year. But what's the worst performer so far this year? I'll give you a few minutes to think about that. You know, could be the British pound, right? The pound got whacked overnight, but it's not the pound, Sandy. But the good, very good guess though, because the pound got crushed. Look at this overnight. First of all, look at the size of the gap, right? This is the Friday close. This is the Sunday night open. That's a substantial gap. I'm going to take this intraday. Let's make it, say, a 15-minute chart so you can see that gap a little bit more clearly. And by the way, this might be a good, well, let me, before I comment on that, let me just take a closer look at this gap. It's a decent-sized gap, right? 122.80 drops down to 122.45, and then it mostly fills. The reason why gaps fill is because if it shoots from here to here, if there's a gap here, that means that no trades were executed. There may have been orders, but no trades were executed. Why? How is that possible? Because every trade has to be a buy and a sell. And if you think about it, when you go to the store and you buy any item that you can think of at the store, somebody has to be willing to sell it to you. And if you agree on the price, then you buy it from them. There's always a buyer and a seller. Well, that's true. Every marking on this chart has a buyer and a seller. And the sellers wanted to sell so badly, and nobody wanted to buy it from here to here. So the orders get skipped over. The brokers try to push it up to make sure those orders get filled. Did the gap fill? Not completely. I think but it only left about a 10 left about a 10 pip gap there. About a 10 pip gap. Great guesses coming in. I see it. I'm going to get to you in a second. But it filled most of the gap. So there's not a lot of orders left in here. I don't see this as a potential play here, is what I'm getting at. A lot of times, if there's a substantial gap, we'll come back at it and try to play it to fill. And if this was a substantial enough gap, we would set it up right now, because we have no harm in setting it up now. If the price comes up here, it gets filled. If it doesn't come up here, it doesn't get filled. But frankly, so much of this gap did get filled last night after the open, like early in the Asian session. It looks like most of it got filled. So there's really no point in pursuing it. Gaps get filled because banks and brokers make money when orders are filled. An unfilled order to a bank or a broker is money left on the table. Okay, so we've got some great guesses coming in. Venezuelan Bolivar. That's a great guess. The yuan is a good guess, but it was extraordinarily weak in late 2016, but I believe it actually got stronger recently. Let me pull that up. CNH. Yeah, look, this is actually pretty darn strong. You know what happened here? This almost got to 7. It got to 6.98. And then the government stepped in and said, we cannot let this hit 7. You know why? Because if it hits 7, then it's on the front page of every newspaper in the world. But if it goes to 6.98, it's on page 13. Does that make sense? They're trying to keep it out of the spotlight, draw less attention to themselves. Right? So yuan, while it's an interesting guess, I would say is probably strengthened so far this year. Now, I haven't personally measured every currency. And as far as the Bolivar, admittedly, it's hard to say. Because, yeah, the Bolivar was probably the weakest currency last year. I think you'd have to say so. Because it got absolutely creamed last year. But it's hard to say because the official government exchange rate isn't even a real exchange rate anymore. But according to Bloomberg, this is not according to me. I haven't looked at every single currency out there. Okay, so it's time to answer the question. I personally have not looked at every single currency out there. But according to Bloomberg, Bloomberg is reporting today that the weakest currency is, so far for the year, remember, the year is only 1 week old. Drum roll, please. Are we ready? I'll pull up the chart. The Turkish lira, which is down 2.5% today, is just getting massacred since the start of the year. Now, so according to Bloomberg, not according to Ed, your buddy Ed here has not checked every currency out there. But according to Bloomberg, this is the weakest currency of the year so far. That's it. Yeah, I mean, but it's a hard one, right? This is a hard question. That's why I thought it would be fun. But look at that, and that is just getting massacred. And people say, well, what the heck is going on? People are just losing their faith in this currency, and it's a scary situation. The government is trying to keep money in the country. Does that sound familiar? Because the same kind of thing that's happening in China, right? And you're getting issues like that in, you have terrorist attacks, you have the Syrian conflict, you have social unrest. There are just so many problems over there. Erdogan there was either a military coup or it was a staged coup so he could consolidate power. Right? Remember that? I had a friend who was over there at the time. He was literally doing Facebook Live, hiding under a table in a bar in Turkey. Just incredible stuff, right? So, here, I'll pull something up for you really quick. Watch this. Turkish lira. Right? Turkish lira tumbles to record low. That's the lowest point ever against the dollar. Right? And so they're in bad shape over there. Emerging markets in general have been taking a beating. Part of it's the strong dollar. But one of the things I noticed, as soon as Bloomberg mentioned this, of course I pulled up the chart, but the funny thing is, right, and look, it's probably too late to play this game now, but check out the moving average. Yoink. Look at this. Bounce, 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 kaboom, right? Well, I don't trade the Turkish lira. I mean, the spread's a little too wide. Depending on where you go, it's really not that wide at some brokers, and at other brokers, it's ridiculously wide. It depends on the broker, and so it's for some folks it might be a little bit on the wide side, and I hate wide spreads. I hate wide spreads. You know what happens? You trade with a wide spread, and so as the day goes on, and like in the U.S. for us, it would be in the afternoon. As the afternoon wears on, it becomes like, you know, 3 o'clock, 4 o'clock in the afternoon. All of Asia's asleep. All of Europe and Britain is getting ready for bed. And all of the U.S. and North America and South America is all getting ready to go home. And there's very little activity, and the spreads begin to widen out. Not on everything, even on Euro USD, the spreads will widen out, but they'll widen more on the exotic pairs like USD TRY, USD NOK, right? NOK, Norwegian kroner, which is this is a tough one to trade. This is a tough one to trade, right? But yeah, USD TRY. TRY is the one that's really getting rocked right now. And so, look, I'm not saying you should chase after it. All I'm saying is, wow, I may have really missed an opportunity. I'm kind of kicking myself here. Is it overbought? Yeah, it's overbought. I think any measure that you could use would tell you this is overbought. It says 78 right now, almost 79. Anything above 70 is overbought, but it doesn't necessarily mean that it's going to come down. Look, this was overbought the whole rally. It was overbought. The fact that it's overbought right now doesn't really discourage me. What does discourage me is that it's extended so far away from this moving average. But this is the type of thing that could take on a life of its own. All right? If people begin to panic, and you get a situation where people who are holding Turkish lira start heading for the exit all at the same time, it could create a scenario similar to what you're seeing in Venezuela right now. In Venezuela, very, very sad situation. People can't eat. Imagine if you were not from Venezuela, you're from a neighboring country, and it's your job to bring food into Venezuela, and they're going to pay you in Venezuelan bolivar. Are you going to sell that? Are you going to bother driving that truck into Venezuela and to sell that food and accept worthless money in return for it? The answer is probably not. And that goes for so food has gotten to the point where in Venezuela that they have to put armed guards on the truck. Like in the U.S., if we have what we call a Brinks truck, it'll go to it's like a fortress, this truck, and they'll go to the bank and they'll take the money from the vault and they'll load it up in the truck, and they've got armed guards on board. So if you try to rob the truck, you're gonna get shot. Well, that's how they have to do it with food. And in Turkey, they have armed guards on the food trucks. Or you'll see they'll put signs on the truck that says there's no food on this truck. Why? Because they're trying to prevent people from robbing the truck. People will storm the truck, if they can. So, pretty bad situation there. Let's talk about the British pound, because this is fascinating as well. Pound US dollar, and not really a trending stock, so we can get rid of that moving average for now, but we'll get back to this. Is the lowest we've been on the pound in a long time, but there's a lot of support down here for those of you who are looking at traditional technical analysis, right? There's a lot of support in this area. Look, bounce, 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 bounce. 121.15, or if you want to be a stickler and include those wicks, 120.85. Call it 121.15 to 120.85. That's about a 30 pip area, and inside of that area it gets interesting. I think you could see a rebound, but not yet. I think you're going to break these lows. There's got to be stops. If you think about it, right? If you bought here, where would you place your stop? You'd place it down here. All right, let's put a little arrow there. You'd put it right here. We'll make that a red arrow because it represents a stop. And if it came down here, somebody bought it here, right? Because if they didn't, it wouldn't have gone back up. You see that nice looking hammer? Right? It came down, somebody bought it, and then it went back up. So let's create another red arrow. We'll put it right here. So there's got to be stops under 12085. So if I'm a market maker, if I'm a bank, if I'm a broker, if I'm an institutional trader, and I know there are stops down there, I'm going to try to get them hit. I'm going to try to hit them. I think for that reason alone, I think that this will go down to 12050. 12050, maybe 120 itself, but definitely 120.50. I see this going lower. If this rallies short term, I'm looking to sell short. So let's take a look at how to do this. Right now, this is down, sharply downward movement. I'm going to go to a lower time frame. I'm going to go to a 60-minute chart, right? And I'm going to look for the rally. Now, there's not been much of a rally here, but there's one. All right, if this sucker pops up, it's going to give you a chance to sell short. So what you want to see is overbought RSI, not on the daily, but on the hourly. Here, it does not quite become overbought here. It does not quite. But that's what you want to see. You want to see this thing pop up and become overbought, and then you're going to start looking for the short. Now, why is the pound getting kicked around like this? The Prime Minister, May, her name is May. The Prime Minister may pursue a hard Brexit, which means, you see, Brexit is a negotiation. We've never had a country leave the European Union before, and the details have to be negotiated. And a soft Brexit would mean, okay, we're not part of the European Union anymore, but we're still part of your marketplace. We're kind of like a junior member of the European Union, right? We're still part of the single market. A hard Brexit means we're not part of the European Union, we're not part of the single market, and we're not part of you at all, basically. That's what we mean by hard Brexit. So May is talking about, May is the Prime Minister's name, and she has been hinting over the past few days, over the weekend, at hard Brexit, leaving the single market, right? And most folks feel that that's negative for the British pound. I think short term it could be, but just remember this, that as an independent entity, see, there are advantages, yes, to being part of the single market, but as an independent entity, the UK can outmaneuver the European Union and capture businesses from them, like McDonald's is moving its European headquarters to the UK. They've already announced it. I suspect Apple might do the same. Apple just leased a rather large space that used to be the Battersea Power Plant. All right, they leased a large space within there. And so I think it could actually work to the UK's advantage depending on how they play their cards. If I'm the UK, I go for hard Brexit, and then I cut my tax rates and get a load of this. I'll say to any company in Europe, not only am I going to give you a lower tax rate, not only am I going to give you a 15% tax rate, if you come now, if you drop Europe now, move your company out of Europe now and move it to the UK, I'll give you a 3-year tax abatement, zero tax for 3 years, but you must act now. That would definitely draw a lot of money into the UK and out of Europe. So the interesting dynamic here, to me, I mean, yeah, the pound is getting weaker and weaker, but I think it comes down farther. I think we need to see a rally in the pound so we can sell short against the dollar. The pound against the euro is a completely different dynamic. Euro GBP, right? The euro crushing the pound today, again, because hard Brexit is considered negative, and you can see there's a pretty big gap on euro pound here as well, right? Now, but you see these wicks? These wicks tell me that there's not a lot of unfilled orders in here. These wicks tell me that probably all the orders in here are filled already. Let's go down to the 15-minute chart. And we'll take a look, and there's the gap, slightly bigger gap, maybe looks, it's only a 20 pip gap, but remember, euro pound is less volatile than most currency pairs, so a 20 pip gap on euro pound is maybe more meaningful than it would be on pound dollar. But it does get filled a bit. It seems like there's still a substantial amount of open space here. There might be some orders left in here. Still not a big enough gap, and it's really far away. And so really the pound is gotten crushed by the euro over the past few days. Now, technically speaking, we call this a cup. Right? And that would generally mean that it's going to continue to go higher. All right, but at some point, I think this is overdone. On weakness, would I buy euros against pounds? No, I'd rather buy dollars against pounds. I mean, on pound strength, in other words. When I say on weakness, I meant on if euro pound weakens. If pound gets stronger, I would not short it against euro. I would short it against dollar. Dollar's just the king right now, let's face it, and you can't fight the dollar at this moment. This is the dollar's moment, right? That'll change. Everything changes all the time, right? But right now, and why is it the dollar's moment? I don't know. I mean, look at the U.S. stock market. Pushing all-time highs, right? Let's pull up the dollar, Ed. You got to hit the right symbol. Here's the dollar, and even a couple of days of dollar weakness, it looks like it's already trying to fight its way back. Spent a lot of time at 103. That's a 12, 13-year high for the dollar index. And look, it falls away, trying to fight its way back, claw its way back to 103. Fighting the dollar right now just doesn't make a lot of sense to me. Unless we see a very clear topping pattern. I don't see that here. I don't see this as a very clear topping pattern, like a double top or a head and shoulders. I just don't see it that way. Okay, it just looks to me like it just goes sideways for a while, and there's a little dip here, and it fights back, and there's a dip here, and now it's trying to fight back again. To me, it's a big nothing burger at this moment. There's no point in trying to short it, and there's no point in trying to fight it. Fighting the trend, I'll tell you this, every trend, and I'll leave you with this thought, every trend is littered with the broken accounts of people who tried to fight against it. Nick Leeson, every famous blow-up like Nick Leeson was by someone who was fighting a trend and adding to a position as it went against the trend. Okay, so that we are not going to fight the dollar. We're not going to fight the dollar trend. Okay? At least not in the longer term. If you want a short term you might be able to get away with it. But you got to be nimble. You got to be ready to get out of that trade. Okay, gang? All right, that's going to wrap up our first 30-minute segment. Thank you for listening. I really enjoyed having you here with me for our first 30-minute segment of the year. Please come back in a half hour, and we're going to do our second 30-minute segment of the year. Until then, this has been Ed Ponsi, your FX educator, saying thank you so much for listening. I will see you back here in 30 minutes. Thanks again.